This is the balance sheet. You can see that equity share cap liabilities and assets with the equity share liabilities with the equity preference, debentures, loan from financial institution means from banks, from banking institutions. Other loans maybe not from other than banks. And the resource and surplus, which contains profit and loss, general resource, and current liabilities, trade receivables, and in the asset side, current assets, trade receivables, inventories, and cash equivalents. And the same balance sheet will be explained from the point of view of the financial management, the financial manager point of view. The person who makes so and so things are called a financial manager. The person who is responsible for making the decision in regarding to the finance. We will look into it. The balance sheet. Okay, right now I am the company. I need to I plan to make a I plan to run the business, so that I need fund. Where can I get the fund? There are a lot of ways you can get the fund, but as per companies, you have few things. Those are called equity share capitals, preference shares, debentures, loans from financial institutions, and other loans. I mean, those are the things which you usually gets the fund. These are the multiple types of funds. Like those are the funds. Generally, if someone needs the money, they can procure the funds in following manner only. That means you are generating the fund by those. Yes or no? If you need the money, you can make those things in that way. I think someone left. Okay, no problem. Okay, first the equity and share capital and preference share capital. Okay, for them you need to pay the dividend. And for the debentures or loan from institution others, you need to pay the interest. Yes or no? Do you have any confusion up to now? Doubts, questions? Okay. Okay, no problem. Ravitaja, you and me are the only person in the class. You don't worry, I'll take the class if you're interested. Or not, if you are in the class, okay.
Hari, actually, you need not to take much actually stress. If there is a strength, it is useful, na? We will
No
plan
problem,
for
man. It's
next.
basic. I will record those things
Yes.
and I will upload it.
Yeah.
That's the thing. Okay. It's
Yeah.
just a balance sheet explanation. That's it. Okay.
Okay, Hari. Yeah.
That's the reason. If we won one, it's not a big deal.
Sure.
Okay. Okay, right now, for the company, we need to generate the fund. Those decisions can be made by known as like financing decisions. Those are known as financing decisions. The fund generation, whether we need to go for preference or whether we need to for debentures, loans, or others, which is a cost to the company. Those are the things which you need to repay after a certain period of time, like after a long period of time, like after more than like if it is more than 12 months, yeah, you need not to pay the like immediately you need not to pay, but it takes time. You need to pay. That's the cost to the company. And you will pay like for the equity shares and the preference share, you will pay like dividends. And for others, you will pay like interest. Okay, right now, the most important thing is the fund and the form. The fund which you are generating and the form. It should be in reduced cost, because in the financial management, one of the most important things is like shareholders wealth maximization. The fund which invested by the shareholders should be maximized. That's the only point of view the person need to be have. Like you need to increase the wealth. Obviously, when you make an investment, you always expect in return. If you make an investment of 1 lakh, you may expect like 1 lakh for 10,000 or 20,000. So you are increasing the wealth of a shareholder. So that you need to make every decision from that point of view. Okay, for example, I need to make a fund at the minimum cost. What's the minimum cost, man? Which is nothing but own fund is to borrowing fund, so that the shareholders fund will be maximum and the borrowing fund will be less. What if it is in inverse relationship, like shareholders fund is less and borrowing fund is high? Then the controls over the company will go for the borrowers, not to the shareholders. Just imagine I am having like only 100 crores in the share capital, and the balance, for example, 400 crores from loan, means the one who funding me, the person who gave the loan to me, have the upper hand in the situation. Okay. The person who gave the 400 have the upper case. Like if he asks the 400, I can't do anything other than selling my company to him or say liquidating the company. Okay. So that you should always make sure that maximum shareholders fund and a minimum borrowing funds. So it should be
Hari,
balanced. Yeah.
I have one query here.
Yeah.
Actually, what is the ratio which is like borrower and shareholders? If we
Depending
take
upon the
borrower,
company, it will may vary, but it is
yeah,
always advisable to have the own funds more than the borrowed funds. If you have borrowed from the 100, make sure you have own fund more than that. After making the settlement to the borrowers, you need to have the control over your company. Okay. After making the
okay,
payment to the borrower, you need to have the control over the company. Just imagine I am having 100 crores. After making 100 crores to the borrowers, I will have, like, still I need to pay 300 crores, like when I have the 400 crores as loan. 300.
oh,
So that I don't have any funds. Where I get funds? Because I got all the funds from the debentures holders or from the financial institutions or from others. So
okay,
before generating the fund, you need to consider all those facts. Okay. So that's the
okay,
thing, you need to know the financial management. Instead of
okay,
having your own fund, if you keep on borrowing from others, then you can't do anything. Even in real life, if you're making any business, just you are the single owner. Just imagine you got 50 lakh loan from the bank. Suddenly, if the bank asks, or if any situation happens, what will you do? You can't repay that money instantly because you don't have any sufficient capital or fund with you to make the payment to the bank. So make sure you have the lesser loan amount while comparing to your own funds. So it should be balanced. Depending upon the company, you can determine it. Even recent time, NDTV got like it has been bought by some other institution. Ambani, Advani, someone, I don't know who is the person. It happened to the NDTV channel. It's in social media, I think so. I don't know. So that's the reason I said like 400 crores. For NDTV, it's the loan amount is 400 crores. The loan given by the person demanding the money, so that the NDTV got purchased by that same person. I think so. I don't know exact scenarios, but it's the real scenario which happened. I don't have any sufficient base. I will go into it. I don't know. Like, I need to look. So that make
yeah, yeah.
sure. Yeah.
Yes, Hari. Carry on, please.
Okay. That's the thing. So while generating the fund, you should keep those things in your mind. For example, the maximum shareholders fund and a minimum borrowers fund. Or else you can't able to expand. For example, if you have a high loan, you will keep on paying the interest. You can't expand your business operations. Okay. And one more thing, what the other funds we have? Yeah, the one which you have, like the owner's fund, like retained earnings, like resource and surplus, which you generated over a period of time, is known as like resource and surplus. The company have the resource and surplus. Yeah, when you have profit or loss, whatever the things, so it will go to the resource and surplus. Yeah, you can use it for expansion by retaining. Instead of going for loan, I have my reserves on surplus of 100 crores. Yeah, I can use it. Or I can use the same amount to pay the shareholders the dividend. Shareholders means those persons. I need to pay the dividends. If you are making the dividend, there is something called dividend decision policies. Like you need to follow the rules. Like it is best or not. Like you need to pay the dividend or not. Right now, if I make a payment of the dividend for the persons, it will help the shareholders, like have the inflow of the cash at the yearly basis. Imagine if instead of paying the 100 crores to the shareholders, we had a discussion with them in the AGM and said, if you go for the loan for 10 lakh, like 100 crores, it costs like 10 percentage. the loan ratio 10%. So instead of that, instead of declaring the dividend for you at 12%, like a 12% of, in this case, I have said like 12% rate of interest, like dividend for the shareholders. Instead of that, I will retain that amount and I will use it for the expansion. I will use it for the some other project. I will invest in some other project and I will make it like just imagine if instead of getting like instead of paying 10,000 like interest by making 10 like 10% interest for the loan, I can use the retained earnings in this situation. For each and every company, there will be different type of situation. Based on that, they can choose whether they can retain or they can distribute to the shareholders. In that case, also they need to think how much to retain, how much to distribute. If you retain entire fund, you can expand the business. Yeah, obviously you can, because you will use your own fund, you keep on increasing your company and you can increase the performance. But at the same time, it may lead to downfall of your share value. Just imagine for past 5 years, I haven't paid a dividend. What will the shareholder do? The shareholders will start selling their shares so that the share value will comes down because the company is not paying the dividend. So you need to decide whether you need to retain everything or not. Some cases you can retain, but in many cases you can't. You need to pay the dividend, or else the shareholders will start selling their shares. It will lead to downfall of the company sometimes. So it's the balance. You need to maintain the balance. Okay, right now I am paying the dividend of 12%. Okay, what is this? It is the cost to the company. It's the cost to the company, but it is the, as you see, it is the return to the shareholders. For the company, it's a cost. For the shareholders, it is a return. Yes or no? Because the company, it's an expense. For the shareholders, it's an income. So
Yes,
it's
yes, you're right.
so it's an cost to the company. It's the return to the income, return to the shareholders. It's nothing but the return on investment. So
Yes,
if in the
yes.
question they say like cost of capital, it is same as a return on investment. So don't confuse with everything. Okay. Right now I've generated the fund. What will I do? Yeah, I have a lot of things. I can invest. Yeah. For making investment decision, where I will invest. Most important, the fixed assets. Yeah, I need the land and building so that I can incorporate the factory. So that I can like have the, like in land, I will construct a building, I will have the plant and machinery so that I can generate and make my business and I can earn the revenue. The return will be 20%. Assuming I am an example, just an example. In this case, I have the cost. I incurred 12% and cost, and I have like 10% interest obligation, and I got the return of 20%. Okay, that's it. Like while making the investment, I need to think a lot of things. There are a lot of risk and a lot of returns. Yeah, it's a risk return trade-off. When you have high risk, you will get the high returns. When you have low risk, you will get low returns. And one of the most important thing, it's a long-term investment because you will hold the fixed asset for a long period of time, and you need a huge amount of money for having the fixed assets. Yeah, you can go for lease options also, or you can go for rent options also. It also will come under the category of investment decision. We will look into it. I don't know if it's in our syllabus or not. I don't know. But in general, there will be like options. Like instead of buying a land, I can go for lease option. It will be more flexible. Or I can go for loan. Or I can go for issuing equity shares. Or I can go for rent. I can pay monthly rent of 1 lakh rupees. So I will compare all the option. I will come with one of the best option among all those things. Okay, that's the thing we will discuss in the investment decisions. Okay, right now I completed a financing decision and a dividend, whether you need to pay the dividend or need to retain dividend decisions. And I explained about the investment. Okay, right now you
Hari,
have generated the fund.
dividend decision is in hands of owner, or it is a government declared kind of thing.
No. For the company, they have to have conduct the AGM, and in the AGM, If the shareholders agrees, they will issue the dividends. That's the thing. If
Okay.
you need to retain or you need to distribute to the shareholders, it has to be decided in the AGM. Before that, you need to make the you can need to make the estimations or analysis report, so that I can explain, like, instead of giving you 100 crores right now, the company will explain to the shareholders, we are looking into the new project which we need 100 crores. Instead of paying a dividend, I can use the same amount so that I don't go for loan. So if the shareholder
Understood.
thinks, okay, they can, or they will just pay something. Okay, they may think like they pay at least 10 crores right now. You utilize the 90 crores because we are investor. We need something in return. They may ask. So depending upon the situation, depending upon the shareholder's decision, it will be decided. But before making the decision, you need to know whether I need to retain or whether I need to distribute. Whichever option is will be merit, which will make the shareholders wealth more, like maximizing the shareholders wealth. That's the thing. And if you need to satisfy the shareholders, or else they will do whatever they like because they are the owner of the company. Okay. Okay, right now,
Yes, yes.
what is research and surplus? I need to explain this. Okay. Interest obligations. Okay, right now I got an return of 20%, and I have an obligation of 10%. The obligation is nothing but the amount which I need to pay. Okay, that's the 10% obligation which I need to pay for the, like, from the organization money, irrespective of profit, you need to pay. I got the return of 20%. In this case, you can see return of 20%. I have a financial obligation of interest of like 10%. It's a lot of, okay, 10%. So after meeting 20% minus 10%, you will get the balance. Will be treated as reserve surplus. On the available resource and surplus, you will decide whether you need to pay the dividend or not. Dividend or not. Okay. After meeting the 10% obligation, you will decide whether we need to make the dividend decision or not on the available balance, which is known as reserves and surplus. On this, we will decide whether we need to declare the dividend or not. Okay, can you understand the linkage between each and everything? Okay, right now, balance is nothing but working capital. I will complete it, which is nothing but current liabilities and current assets. Yeah, when you manage trade receivables, trade reversal management, trade receivables, payables, it's receivables, receivable management, inventory management, cash and cash equivalents, cash management, or treasury management. Those will make some decision. How many days I can give the credit period, which will be flexible to me. If I'm offering, like, for example, lesser percentage while comparing to the bank, everyone will come and purchase from my organization. So you need to think everything. And most important, you need to determine how much working capital you need, so that you can finance. Like, how you finance, you will generate the fund by financing decision, or you can use the retained earning to run your day-to-day business operations, because those two are related to day-to-day business operation. Those two are fluctuating things. Okay, that's thing. Do you have any doubts up to now? Do you have any doubts?
Nothing, Hari. Yeah, clear it is.
I think to be clear, like, I will explain this thing. There are only few seconds left to me. What is that? Yeah, you need to make few decisions. Those are the things called finance, investment, and dividend decision. What about the working capital, man? The working capital is nothing but management. Working capital management. I can't write it, sorry. Okay. What's about the financial decisions? Where to get the money? What about the investment decision? Where to invest the money? What about the dividend? How much to distribute among the shareholders to keep them satisfied, or else it will lead to big consequences. If you can satisfy all those things, it is nothing but the financial management. The person who does this is known as the financial manager, CFO of the company. The financial management is nothing but study of balance sheets. Financial management. Okay, less than 1 minute. The financial management maximize the share, like a once again. The maximization of share value and you will make decisions, which is nothing but financial decision, investment decision, dividend decisions. So in final, you need to maximize the profit and the wealth of the shareholder. That's the complete scenario of the financial management. That's it.